We partner with the financial publication, so you can get a sneak peek at the Financial Times flagship column a day early. Ben McLannahan joins us now from a very soggy Hong Kong. Thanks for coming in despite the rain. Appreciate it. First and foremost, we're looking at $1.5 billion in this gray economy. Explain what the concept means of this gray economy and where they even find where this economy was found, how they found the funds.
Yeah, this is the grey economy. It's the unofficial, hidden, undercover economy. It's not the black market. That would be illegal. This is all legal activities, but not disclosed to the tax authorities. So it's by that terms, it's grey, and it's actually a lot more than 1.5 billion. It's 10 trillion renminbi. That's the difference between the official household income figures reported to the National Bureau of Statistics. That's the Beijing-based body that accumulates all the national economic data. Okay, and the $23 trillion figure reported to another body, which is a non-governmental group sponsored by Credit Suisse, which every 2 or 3 years goes out and does a cross-check. It talks to people anonymously, asking them, OK, how much do you really earn?
So on the face of it, it seems like good news. I imagine there's a but here.
Yeah, there's a very big but. The good news is that it suggests a much more powerful Chinese consumer than perhaps markets have factored into. And also for Beijing, it suggests if they actually crack down a little more on tax collection, there'd be possible ways to alleviate fiscal strain, say, by another round of bank bailouts. But the bad news, if you go into the data, notwithstanding the fact that this is a vast grey economy that the state planners have no control over, if you go into it, you can see a widening income disparity gap between the richest 10% and the poorest 10%. Now, 3 years ago, when Credit Suisse did this survey, in conjunction with NERI, the National Economic Research Institute, the multiplier between the top 10 and the bottom 10 was about 55 times. It's now much bigger, about 65. And the official data is of course, much smaller, 23 times.
So we have this huge income disparity, but what about that emerging middle class with more and more buying power in China?
Yeah, you'd think so, but at the margins, it's a case of widening social instability. The rich getting much richer, the poor getting much poorer. China's Gini coefficient of income disparity is officially about on a par with the US at about 0.4, where 0 is a totally equal society, close to Sweden, say, at 0.2, and 1 is a completely unequal society. South Africa, 0.6, is about the highest it gets, and China officially is about 0.4. But this data suggests it's closer to about Brazil, 0.55. And in terms of social cohesion and social harmony that Premier Wen is so keen on, this is undeniably bad news.
Ben McLannahan with the Financial Times. Interesting new research about the grey economy in China. Thank you very much.